Welcome to the Credit Union Sales and Marketing Podcast. Your hosts, Bill McKenna, Paul Robert, and special guests discuss ideas for creating alignment in your sales and marketing efforts and ways to accelerate growth. Now let's get started.
Hello, everyone. Welcome to the Credit Union Sales and Marketing Podcast. I'm Paul Robert with FI Strategies. My cohort, as usual, is Bill McKenna from McKenna Marketing Network. Bill, great to see you again, buddy. How are you?
I'm doing well, Paul. Hope you had a nice weekend.
Good. Yeah, I did. And I'm wearing my yellow shirt here, Bill, so you don't miss me over here. So I stand out. You know, it's kind of fluorescent a little bit. It makes me think of some credit union colors and some brands. We got to do a podcast on that sometime.
Yeah, we do. And I'm kind of like gray with stripes or something. So I'm sort of in between there. But yeah, I was just adjusting the color settings on my computer because that shirt was definitely coming across pretty bright. So
yeah, all right. I didn't think about that when I picked it out of the closet this morning.
I was going to put my sunglasses on, but these adjust automatically, so I should be okay if it gets really bad.
Hey, our topic for this edition is going to be on growth. And, you know, Bill, I think at the end of the day, what you and I do with our clients and ultimately what we want to do through this podcast is help credit unions grow and thrive. It's critical for them individually, but it's also critical for the credit union movement as a whole, that we continue to grow. And it's easier said than done. There are ways to grow more effectively than others. We hope to touch on some of those today, but it really is about growth, isn't it, Bill? I mean, that's got to be at the center of everything that we're doing from a sales and marketing standpoint.
It's what we talk about all the time. And with my clients that I meet with, it's always about we're struggling to grow, or we're looking for new opportunities for growth, or if they are doing well, how can we deepen those relationships? So it's all those things. But yeah, we have to stay focused on growth. That's what we're doing. I mean, you know, we can have a great time running a credit union, but if we're not growing, we're really not doing what we're supposed to do. And we're not serving our members well by doing that, because we should be giving them a better place to do financial transactions and care about them, all those things.
Now, let's define growth, okay, for the context of this conversation. I'm focused on three things, all right? Number one is attracting new members, all right? We got to be moving the needle in a positive direction. Year over year, we have to be attracting new members. Number two is retaining existing members. So it's one thing to bring people in the front door, but if, you know, a big number of them are escaping out the back door, that's not desirable. So we got to make sure we lock that door and retain existing members. And then the third one, Bill, is really deepening relationships, deepening wallet share. And, well, I would say that as we talk about growth, and especially if we talk about net growth, those are the three areas that are most important. Would you agree with that?
Yep, absolutely. And we know that attracting new members, you know, a lot of times we talk about that membership growth. And we know for a fact we see a lot of that coming in from, for instance, indirect lending is a huge driver of new members for many credit unions. So those who aren't doing indirect are struggling a little bit more than the ones who are. And yet you just talked about retaining members, because what we see sometimes, whether it's a CD special, right? Whether it's a certificate we're selling rate, or it's a car loan that comes in through indirect, we find those relationships are shallow. So we get new people in, but we look at the back end, and all of a sudden we lost relationships with all the people we had for years. We're losing them out the back door, right? So we have to, or that loan. You know, we always talk about the next loan strategy. That loan was on the books for 36 months, and now that loan is gone, or 48 months. Tends to be a little longer today. But that's exactly what we see all the time.
And I would argue, and I know this isn't necessarily from a CFO's perspective, it's definitely from a sales perspective, but what's the point of driving somebody in the door with a good loan promotion or CD promotion if you're not going to do something with that relationship, if you're not going to actively try to deepen and solidify that relationship. It just seems, I don't know, very transparent, get them in, get them out type of mentality. Let's, if we're going to get them in, if we're going to go through all that trouble and effort and cost to get them in the door, let's have a strategy for retaining them and deepening their relationship.
And are they the best people to bring in the door? It's definitely a short-sighted strategy. When you see, of course, indirect lending provides, obviously, it creates income. So it does. It's good. You get those loans. Same with the sheriff. If you bring someone in the door and they change for 10 basis points, is that really a great deep relationship? The answer is no. That's not what we see. As a matter of fact, so as I'm looking at some stats here from the credit union end of year 2024, what I see, and this is from the NCUA, I see that especially credit unions under 500 million are struggling in the areas of share growth, and the more they're struggling with that. They're struggling with total assets. They're losing assets, right? So, and those are almost all negative when you look at 500 million. Even to a billion, some of them are struggling with those areas. And then total membership growth, same thing. The membership growth is declining on all of those. Net worth is okay, but especially the tiny, smaller ones are having a little bit of trouble with that. So all of the factors, we see a lot of them, even between the 500 million and $1 billion ranges, they're still struggling, but especially under that 100 to 500 million, that is an area. And that really, I think, is something that, a lot of clients we talk to, they struggle with these things. So, like, what can we do from what you do on your end and the marketing end? How do we tie that together and make some of those things more positive?
So let's think about that 100 million to 500 million, give or take, credit union, Bill. Those guys are in a position where they can't afford, literally as well as figuratively, they can't afford to dramatically change their business model, right? They just simply don't have the resources to do that. So in their case, and I know that's a big part of our audience out there, the $100 million to $500 million credit union, in their case, they have to find ways to be better generally within the same business model that they've been operating in for the last few years. They can't go out and add a commercial division overnight. They can't start doing business loans. At least 4 out of 5 can't. They've got to continue to function within the constraints, if you will, of their size limitations in order to be successful. And so I think that more so than anybody else, I think that requires a $100 million to $500 million credit union to focus heavily on sales and marketing, because they have to make the most out of what they got. Do you agree? And does that make sense? Did I explain that right?
Yeah. I think it's definitely a deep conversation, right? It's not something you just spit out a perfect answer. And every credit union's a little different where they're at right now. What's their field of membership? Is it still solid? Isn't it solid? So all of that varies, Paul. I do agree with that. But what I keep thinking about is the credit unions, especially, and again, I'm looking at stats here. There's only less than 800 credit unions that are 500 million and above out of the 4,400. Only 800 of them. The rest of them are smaller. And we continue to see this consolidation. We can, these credit unions becoming, I hate to use the word merger, but the consolidation of our industry is going to continue. So the credit unions that want to be there have to do those things you're talking about. And I would say the number one thing they need to focus on is deepening the relationships with the existing members they have, because that is the low-hanging fruit. You already have that relationship. So let's talk for a few minutes about that specifically. How do we deepen the relationships with the members we have, especially if we're a smaller credit union?
Well, so the first way that I'll answer that, Bill, and then you chime in from a marketing standpoint, is it's got to be different than the approach with a brand new member. the existing member already knows you. The existing member has been exposed to you for a while. Some, a matter of a few years. Others, many, many, many years. Okay, so that's where the challenge comes in. They've already been receiving our marketing. They've already been in our branches and interacted with our people and gone online, et cetera, et cetera. What can we do different with them? And I think, Bill, the answer there is personalization. And that's where we really have to challenge ourselves. Let's start with from a sales standpoint. We really have to challenge ourselves that just because that member comes into my branch once a week or twice a week or 3 times a week, that doesn't mean that I know them and I know their financial situation today and what it's going to be in the future, et cetera, et cetera. How can I really get to know them is the challenge from a sales standpoint. We have to, we have to almost look at them as if it's a brand new relationship. It's the first time we've ever had a conversation with them. And that's easier said than done. It takes a specific skill set to do that, and it also takes certain behaviors and activities to accomplish that. So I think that's important from a sales standpoint. What about from the marketing side, Bill?
Yeah, I agree with you. It is about personalization and starting conversations. So as I listen to you talk, I think about, that person that we do see in person often, or that person that calls into the call center for whatever reason. We have to find a way to start that conversation, right? To get a conversation started, more than just about that particular transaction, but what can we do?
Here's just a quick shout out to our sponsor, ironistic.com. Hey, in today's world, everyone knows the importance of having a great website and having an integrated digital marketing plan. If your credit union, community bank, or any other company is looking for that help, I can highly recommend ironistic.com. Check them out.
And I know, Paul, you work all the time with, what are the obstacles to that? If there's a long line in the branch or if there's a bunch of people on the queue, they're less likely to want to have that conversation. So maybe from a marketing standpoint, we give them better tools to work with. We use the tool, the term rather, cross-sell, right? And we know it's really about sales. We did a whole podcast. We talked about that. So what tools can we give them, even if there is a line of people, or do they have something they can say, hey, quickly take a look at this, or here's a QR code. When you take a look at, our wealth management program or some other product that we're talking about, how do we tee up those conversations and make it quick and easy to do that? So that's the in-person part. And I know, Paul, you do a lot of those things because that's what you're trying to do, is get these people to start the conversation. Would that be correct?
Yeah, and before we get off of the in-person, let me comment on that, Bill, because, one of the things that we train on and we talk to credit union branch staff about is exactly that, stimulating a conversation. And one way to do that would be to simply ask that member that you've known for 5, 10 plus years, hey, what else could we be doing for you that we're not doing today? How else could XYZ credit union be helping you that we're not today? Now, they may not answer that question or be able to answer it on the spot, because most people aren't thinking in those terms, but you're planting a seed. And then the next time they come in, or the next time they do have a need, they'll reach out to you and say, hey, do you guys do this? Or I've never asked you about this and I need this product. Can you guys help me with that? And that's exactly what you need and want, is for your member to be thinking of you in those terms. And so I think asking them that very simple but powerful question, what else could we be doing for you, or how else could we be helping you deepen your relationship, your financial relationship, I think is a great way to get the conversation started.
Yeah, and when you talk about taking that on the away from the in-person conversation, you do the same thing via email. And I keep saying to credit unions, a really good email program is absolutely essential today. But we don't want to be selling in those emails. We want to be talking about the ways we help. What are the benefits of using our home equity line of credit? or what are the benefits? It's storytelling, exactly. Or how can we help you save in your next car purchase? Or where should you start to buy a car? How should you do that? Those are conversations that we can create both in person and also digitally. And certainly in email, we can segment. Although a lot of cranes aren't doing a good job with this, it's not one size fits all. This is where we start understanding the importance of having data on members and who they are, what are their ages, where do they live, and buying appended. Exactly. That's how we start those conversations digitally, where in person, they're a little different how you do that. But the call to action in both could be the same. For instance, if you're talking like that, we're going to really talk about home equity this year or this month. So when a member walks in and you happen to see that they're a homeowner, if you have that data available, and now in the email they get something on home, you're building frequency. And I say, Paul, you've heard me say it in the sessions, it's the number one driver of success, frequency. You have to be in front of people and have those conversations all the time.
Hey, I love that you went there, Bill, because a few minutes ago when we started talking about personalization and I was talking about it from a sales standpoint, I was thinking about it from a marketing standpoint, just as you enumerated there about we can't generalize, we can't assume. We really have to find out, how do our members use us today? How's that different than how they used us 2 years ago and certainly 5 years ago? What are the trends in that regard? But then overlay it with the, anticipation of potential life events that are upcoming and so forth. But really get so granular, Bill, that we're looking at that almost at an individual personal level, right?
Yes. Yeah. And so here's the thing, right? So, and I love what we're talking about. So let's go back to home equity for a second, just because it happens to be a product that more people are looking at. With home values rising in a lot of markets, people have equity available. That's a nice loan for us to get because it obviously produces income. But if we're doing a home equity campaign, the frontline people, the people that talk to members in person, they need the support tools for that, whether that's point of sale, or whether that's getting back to the old buck slip or stuffer with a QR code on it maybe today, or maybe right on the teller mat in front of them, scan your phone to learn more. But now here's the other thing. When that person talks to Paul Robert and says, hey, by the way, we have a home equity special. I don't know if you have anything on your bucket list that you want to do. Would you be interested in getting some information on that? Oh, yeah. You could send it to me. Well, that person behind the scenes, they should have an email already created by the marketing team that they can quickly send out after that conversation. When they get a quiet moment, they can send out those 6 emails of those people they spoke to that had an interest. And that email could say the same thing. It could lead them to a blog post. It could lead them to something, not just selling rate. That's where working as a group, you build the personal follow-up, and you also now in the email build the digital follow-up. That's where the frequency is built, and that's how you're going to close more deals.
And let me chime in from a sales standpoint, Bill, because one of the things that we really emphasize when we're working with credit unions to create their sales process is you can't expect to sell. You mentioned the term cross-sell. You can't realistically expect to cross-sell very much in one interaction with a member. Most people are just going to be focused on doing the transaction at hand in front of them, get it done, and then later on, oh yeah, Bill said something about home equities. I am interested in a home equity loan. We refer to that as planting a seed. When you've got that member in front of you, whether it's physical in a branch or on the phone or digitally, when you've got that member in front of you doing a transaction, you have to first plant a seed about other ways that we can help them. And storytelling is a great way to do that. And there are a couple others that we could talk about later. Plant the seed, but then to your point, Bill, have a regimented and defined process for cultivating that seed. Following up, whether it's marketing pieces, whether it's the next time the member comes into the branch, whether it's shooting them a personalized email or part of the thank you that's baked into your onboarding program. There's lots of different ways of doing that, but there's no point in planting a seed if you don't know how to follow up on it. And that's where sales and marketing can really be a powerful 1-2 punch.
I mean, a farmer, when they plant a seed, they don't just plant the seed. It has to be watered. It has to be cultivated until it blooms, right? And I know nothing about farming. The only thing I have is a farmer's tan from playing golf. But the truth is, that's what we have to do. And all of these things align perfectly, inside, outside. And I think what happens too many times still is the sales, the team in the branches, or they're doing their thing and they're looking at stuff, and the marketing's over here, but they're not taking the time to really truly align. That's what this podcast is all about. How can we align better? How can we work together? And I think what we're seeing is, especially in a smaller credit union, they're not aligned a lot of times because they're just not thinking that way. They're not thinking about the whole thing. How's it all work together? It's not one or the other. We have to align it. Now, there's a lot of larger credit unions that listen to this podcast too. So we know that many of them are doing these things, especially the digital alignment, the retargeting. When someone does come and check out our product, they're retargeting them with offers, and all of those things are really good. Really good. But for the smaller credit union that might be struggling with execution, some of the basics have to be done first. The internal team has to be aligned. The marketing that we do, even if it's just email or some follow-up, has to be aligned. Everyone has to be on the same page, and there has to be a plan for this, or you will not see the growth we're looking for.
And I'm going to say something that's totally self-serving, but I firmly believe it because I was in the shoes of many of those sales and marketing people that are listening to this. I believed it then, I believe it today, and I will in the future too. You can't always do that internally, Bill. You many times need outside facilitation, a third party to help you bring everybody together and really unify those approaches. If nothing else, the simple saying of what got you here won't get you to where you need to be, it applies here. Because, if we already knew about this synergy that you're proposing, well, we'd already be doing it, right? So we really need to make specific, deliberate steps to move in that direction. Let me say one other thing about the small credit union versus the big credit union. I agree with you that the big ones might be a little bit more coordinated in this regard, but here's where I see it fall apart a little bit is, you've got so many branches in so many different kinds of markets that they're doing things differently. And unbeknownst to the marketing department, in some cases, unbeknownst to the head of retail sometimes, you've got a market that is doing things totally different than everybody else is. And then within a branch, you might have 2, 3, 4 different member-facing employees, loan officers, let's say, and they're doing things 2, 3, 4 different ways. So in that case, it's really corralling everybody and getting them all on the same page and kind of rowing in the same direction. So I think what we're talking about manifests itself differently for small credit unions and big credit unions. But the key takeaway is every credit union really needs to synthesize their sales and marketing if they're going to be successful with their net growth strategies going forward.
Agreed. It's alignment. It's all about alignment. It's about having everyone, working together to make things happen. And, you brought up that point, and different branches, for instance, or the larger an organization gets, the more difficult it may be for them to align everybody, right? And step back and have here's what we're going to do. And then you get into the areas of the different personalities of people that lead those branches, because we might have a real, go-getter or 4 or 5 branch managers that are super good and they're working it and they're doing the community stuff they got to do and they're out there. And then you got 3 or 4 that, are more transactional based, and they're good people, but that's not their temperament. They're not used to being this outgoing personality. They're really good people to get the job done, but they need some training in that area. But again, it's alignment. It's everybody doing the same thing, having the same messages to share. And I think we're going to talk in one of our sessions really soon. A matter of fact, maybe the next one even, a little bit about brand differentiation. How do you stand out differently? What is it? And it is, by the way, none of this is about just rates and fees, is it, Paul?
Well, it better not be. If it is, we're not going to be a business for very long. So it has to be about how else can we stand out? No question.
No, I was just going to say that, kind of in the wrap up here on this one, I was going to say that I think we have to really focus on creating value. It's all about creating value, right? And that's done typically through good conversations, good content. We have to create value. People don't want to be sold to. We have to create value. And that comes both in person and through our digital marketing.
So growth, it's all about growth, focusing on growth. We didn't even get into the idea of net versus new, but I think net is what we really need to be looking at. But attracting new members, retaining existing members, and deepening relationships with every member. That's the golden triangle in terms of net growth. That's what we need to be prioritizing as we lay out our strategy to continue to survive and thrive as we move into the future.
And, Paul, that was a perfect wrap, and I should close it right here. But I have one other thing that came to mind that I think is worth mentioning. So we talked a lot today about having the strategy, right? About having the alignment, but the truth is, I think the place people fall short is they think about this in their head. They understand this in their head, but they don't actually create a true plan of action. What are we going to do? How are we going to repeat that process? And how does that work both in person and in marketing? That's where the outside looking in approach helps sometimes to create a clear plan of action. It's about execution, not just thinking, because everyone understands this. But how do you execute it?
Yep, agree. All right, I think we're at the point, Bill, where we're going to start repeating ourselves.
Yeah, we pretty much do that all the time, so we might as well just stay.
But again, focus on growth, focus on synergizing sales and marketing. Make sure that we prioritize those 3 growth metrics in order to be successful going forward.
All
right. Great stuff, Bill. Great seeing you again. And we will talk again soon, and look forward to continuing to help credit unions with their sales and marketing forecasts.
All right, Paul, have a